Hello and welcome to LinkedIn Live with me, Garth Sharif. I'm excited to be back. It took a few weeks off for work, also to spend a little bit more time with the family. But I'm glad to be back here for our LinkedIn Live. Again, trying to make these every Tuesday or every other Tuesday around this time. And the subject today, as we see the front lines, front pages of the newspaper around the business world, at least, uh, these banking calamities, the collapse of SVP or SVB Bank in Silicon Valley, and then Credit Suisse, and the questions that these raise. And there's been a lot of analysis around, who's responsible for this, who's to blame for this. Is it the banks? Is it the regulators? Is it the auditors? I work in the audit profession, delivering training courses to audit professionals across Canada and the US. So I like to say it's not us, but there is a percentage of each responsible party in terms of proper governance, regulation, management, and what banks and financial institutions should do to make sure that they're healthy, because they are not just in there for themselves and for their depositors and for their customers, but they also serve the broader capital market system. And so when something like this happens, these questions get raised. But this feels very deja vu to me. This feels very much like 2008, when we saw the subprime crisis, especially in September, when Lehman Brothers collapsed, AIG was in trouble. There was just all these same conversations around bailouts, what we should do with the financial markets. And it was interesting at that time, also very, very stressful, as it is now too, because in 2008, there was a broader effect of what was happening with the subprime mortgages that were starting to go toxic. The ultimate effect of it was that it was going to be difficult for financial institutions globally across the world to lend money, causing issues with businesses, customers, suppliers, everyone trying to just live their lives and carry on with their businesses and personal lives. It was really a significant problem, moving us into a recession. And so the question becomes, what is these two bank failures and potentially more bank failures along the way? Will it take us into a place similar to 2008? And what is to be done? So there's a lot of questions about what we can do to prevent this, but these questions were the same in 2008, in terms of maybe more regulation of financial institutions, more scrutiny on their overall asset liability management. And brings me back to the story of blockchain, actually, because uh, a lot of people, when they hear the term blockchain, they think immediately Bitcoin, cryptocurrency, investments, speculative investments. Now you might think about Sam Bankman-Fried and FTX. But what's interesting about the origin stories of blockchain, and I'll share that with you, and I share this in my course because I think it's a fascinating story, and it's worth retelling, especially now, as it's relevant to the current banking crisis. I know we're looking for different terminology to define what's happening, banking calamity, whatever you want to call it. Is that the inventors of blockchain were looking to make sure that this doesn't happen again by subverting the banking system and capital markets, including monetary policy. And with cryptocurrency and Bitcoin and the different versions of Bitcoin being more of the focus around cryptocurrency, we sometimes lose the reason for its existence. So I wanted to go through that story with you, just because it's interesting, and it gives another option that didn't materialize. Actually, the 2008 option, that the white paper that gave the blueprint for blockchain, did not end up replacing banks or domestic currency or centralized banks. But it was interesting with the questions raised in the white paper. So I wanted to take us through that story. So, quick story though; it's not a long story, but it's very, very interesting. So what I'm going to do is I'll just take us through what happened with blockchain, because it's interesting, because this is not necessarily about blockchain as it is as to what Satoshi Nakamoto was trying to do when he, she, or they released the white paper on blockchain. So it's interesting to know when blockchain began. So this is titled "Blockchain Begins," but when did it begin? When did the technology of blockchain and then cryptocurrency and Bitcoin, when did it arise? It arose right after, not after, during the apex of the financial crisis in 2008. So in 2008, the financial crisis was happening. It felt a lot worse than this one because still with the banking collapses, it still feels somewhat insular. It doesn't necessarily feel like it's impacting the global economy. Now interest rates are rising. There's other things that are happening at the macro level. But the 2008 crisis felt very much like it's going to tip us into a recession. It was going to cause people to lose money, and then there was real existential dread about what's going to happen with the entire the financial markets, capital markets, banking system. Everything reset as it's want to do. We're looking at this what now, 15 years later, right? From 2008, and we kind of forgotten about it. We have a little bit of the memory of a fish when it comes to these types of failures. So obviously things were done at the time in terms of regulatory um, add-ons to both the banks and credit rating agencies, and there's more scrutiny paid towards the types of assets banks were investing in. But again, we're faced with the same issue. So in 2008, we have the subprime crisis. In October of 31st, 2008, Satoshi Nakamoto, who is not a real person, a pseudonym for the inventors of blockchain, who we don't know who they are, which is again adds to this amazing story, publishes a white paper, uh, unbeknownst to most people in the world except for the authors. And that white paper is still there. Here it is on Bitcoin.org. This is the white paper that has given the origin to a massive economy of cryptocurrency and other blockchain inventions. And this is only 7 pages long. Okay. Now, once you go into page 2, 3, 4, 5, it gets into cryptography, computer science, some other Merkle tree root hashes, all these things that if you don't have a background in can be a little bit overwhelming. But the first page of this white paper that was published by Satoshi Nakamoto, but we don't really know who, that provides the free blueprint to create a cryptocurrency, your own cryptocurrency, the cryptocurrencies that are currently out there, and also any other inventions off blockchain, such as digital art, NFTs. The NBA has its own blockchain app called Top Shots. But the first page gives us an insight into what Satoshi Nakamoto was trying to accomplish. He, she, or they were not trying to accomplish a new system of investment for return on investment. No, they didn't want that necessarily. Actually, they didn't want that at all. Um, they didn't want they didn't want they didn't want what has happened with cryptocurrency or Bitcoin. They wanted something else. So if you look at that first page, and let me just show it on the screen here so you can take a look. This is the white paper, the original white paper that's still there on the internet. So if I wanted to create my own Garth Sharif or Sharif Consulting cryptocurrency, I can do that because this 7-page white paper is still there. Now, the first page is really interesting because the first page, and I'll take it, I'll paraphrase it. Basically, it gives the motivation, the reason the entendre for this white paper. And what's interesting about why this white paper came into existence from Satoshi Nakamoto was a real distrust of the current banking system. This is 2008. A feeling like there was a lack of transparency with how these banks and other financial institutions were holding these that and in the subprime crisis, these mortgage-backed securities, which under the principle of diversification was supposed to be fairly strong, but ultimately started to unravel as mortgage holders weren't able to keep up with their mortgage payments in 2008. And that first page goes into questioning the transparency that banks may or may not provide, and this has a specific point of view. Satoshi Nakamoto on that first page says, banks do not provide transparency. They are a black box, an opaque box, where we don't always know what's going on until it's too late. And in the first page, Satoshi Nakamoto gives the reason for the entire white paper, which was to actually eliminate banks, domestic currency, and central banks from the entire capital market system in about 7 or 8 pages. And it's interesting because a lot of the same concerns in that first page has arisen again with the collapse of these banks, SVB and Credit Suisse, in terms of not knowing what's happening with, let's say, underlying investments held as assets against liabilities, let's just say to pay back depositors, until it's too late. And this doesn't seem as complicated as subprime mortgages, because in this case, these banks are unraveling because of their purchases of low rate treasury bills or bonds at a time where interest rates were low. And since the interest rates have spiked dramatically in the U.S. and Canada so quickly, these underlying assets that support the liabilities that a bank has have eroded, and we had a sort of almost a classic run on the bank, whereas investors started to feel like they might not be able to pull their money out because if the banks have to cash these treasury bills and bonds, they're not going to get full value given interest rates are so high, and those were low interest yield bonds. I just got more and more people panic and say, I want to pull my money out of these banks. But the question becomes, the strategy of purchasing these low interest rate bonds and treasury bills and other assets, they weren't really. You could always say they were known. You could kind of look into the investment portfolio of a bank or an institution, but they're really not known in the same way that we might take action immediately or raise questions as interest rates started to rise. It usually comes a little bit later on, as we get into the calamity or crisis. I'm going to actually add the chat overlay here and see if there's any chats that are happening in the background. I think I got one comment. We'll see if that happens. Not a big fan of that background there, so maybe I'll put it back to my own background. And so Satoshi Nakamoto had these same questions in 2008. Had these same questions in terms of transparency into the bank, and wanted a way to say, let's get untrusted third parties together, and let's do this without an intermediary, without a financial institution. And let's do this through blockchain. And then when it comes to monetary transactions, let's replace the US dollar, Canadian dollar, the euro with another currency that's not attached to a centralized bank, in this case, Bitcoin. And that's the ethos of the white paper. So it's really interesting that this is coming back around. Now, this is not meant as a live webinar to say, hey, blockchain is the best thing ever. Look, we should be using blockchain for our monetary system, for our ways of overcoming these issues with the banking system. That's not what I'm saying here. But it's really interesting to revisit this white paper and look at the concerns that arose in 2008 and gave birth to this, gave genesis to this white paper, and see in the newspaper. To me, it's a very much a deja vu to 2008. And it feels like these things tend to just repeat itself, like history repeating. I'm not sure if blockchain is the solution in that way, because blockchain definitely and Bitcoin had definitely not taken the shape that Satoshi Nakamoto wanted to in this white paper. Satoshi Nakamoto envisioned, let's say in 2023, a world in which we are transacting with Bitcoin. We do not have a central bank, a Federal Reserve, a Bank of Canada, European Central Bank. We don't have domestic currencies, and we don't have financial institutions that people go to facilitate transactions. That did not happen, right? And what happened instead is that we do have cryptocurrency, we do have use of blockchain, but it's very much sort of in line with the other capital market investments. So again, like any invention, any innovation, it doesn't necessarily take shape the way the inventors think it would. But it's still interesting to come back to that white paper. So I urge you to take a look at that white paper and read the first page. If you're a computer programmer or Went to University of Waterloo for Bath. That's my alma mater. Then read the entire white paper because you'll be able to understand all of the components that go into blockchain. But that first page, it's worth revisiting it as we understand what might be the further fallout from other banks that might be under pressure, to what's going to happen next. Because is it a question of more regulation, more auditing, or is it a question of transparency, which was what this white paper was getting at? All right, so yeah, just it's an interesting time to revisit the blockchain white paper that was called Bitcoin, a peer-to-peer electronic cash system. I have always thought that the story of blockchain Bitcoin is movie material. It is the logical sequel or prequel maybe to The Big Short, from Adam McKay. So maybe we'll, once the movie comes out about blockchain and Bitcoin, then me recapping it will be less interesting. But until then, I will recap the story because it's so interesting and also it's relevant right now. So thanks for that part. Just quickly on some items on my side on what's happening. We have on treeconsulting.com events that are happening, and we have some free events that are happening, virtual events that are happening in May and then June. So we have an events page that has just recently been added to shreveconsulting.com, and we have an audit and assurance update 2023 on May 9th. That's free. Another auditing technical update that is actually for U.S. auditors. So there's both Canadian and U.S. I am a U.S. Sponsor, a NASBA sponsor. So if you attend a webinar that's for U.S. CPAs, you also qualify for your U.S. CPE. And so if you want to take a look at the events, a lot of the events that we have, including blockchain and the origin story of blockchain, these are coming up and they are free events for the summer. So if you want to join me and take a look at these they're 1 hour webinars, that'd be great. Great to see you at these 1 hour events. That's all I have to say. I'm glad that I could make a comeback here and do a LinkedIn Live on this Tuesday as we enter spring, which I'm happy because the weather has been pretty awful where I am in Toronto. And I'm glad that it's getting a little bit warmer. I'm hoping it's going to be a little bit warmer for where you are. And yeah, keep apprised of what's happening with the banking crisis. It's both alarming, but also what are we talking about when we understand the root cause or some of the causes of this. I think it's interesting to look at it from that point of view. But thank you for watching this LinkedIn Live. I saw we had a couple of viewers today, and if you added a comment, I might add to your comment later on. But I'd like to say thank you for watching, and until the next time, thanks everyone.